Welcome to Master Your Money, a channel that empowers you to take control of your finances and unlock your income potential.
You know, we're all taught that getting rich is basically a math problem, right? If you just learn enough about stocks and bonds and tax codes, you'll eventually build wealth. But what if that's completely backwards? What if the biggest factor in your financial success isn't your spreadsheet, but what's actually going on inside your own head? Today, we're going to unpack the 80-20 rule of wealth. So I want you to just look at this number for a second, 80%. This single number right here is the key to understanding why some people who know very little about finance get incredibly rich, while some financial geniuses can end up broke. This is the secret variable that changes everything. And boom, here it is. This is the core idea we're digging into. When it comes to your money, success is about 80% behavior, how you act, and only a tiny 20% is about what you know. You can read every finance book ever written, but if you can't manage your own impulses, you're going to lose the game. It's not what you know, it's what you do. Okay, so this 80-20 split, it points us right to the main problem here, what we call the knowledge-behavior gap. It's that super frustrating space between knowing the smart thing to do with your money and actually, doing it consistently. Think about it like this. On one side, you've got the math whiz. This person can explain compound interest in their sleep, they can build the world's most perfect budget, but they're always tinkering, always chasing the hot new stock, and making emotional decisions. Then, on the other side, you have the consistent contributor. Their plan is dead simple. Maybe it's just a monthly automated investment into a basic fund. They don't know all the jargon, but they never miss a contribution. So, who do you think wins in the long run? Yeah, it's almost always the person with the better behavior, not the bigger brain. So if our behavior is the real problem, where does it even come from? I mean, why do we act the way we do with money? Well, the answer is buried deep, deep in our past. Turns out, we all have this kind of invisible money script running in the background of our minds, and it's dictating our every single financial move. Now, I know this might sound a little dramatic, but honestly, this is a deep truth. Our decisions about money are rarely just about the numbers. They are almost all emotion. The anxieties, the beliefs, the habits we have as adults are really just echoes of what we saw and heard and felt about money when we were kids. And check this out. This is exactly how it works. It all starts with the beliefs about money that were planted in our minds when we were young. Then, those beliefs trigger very specific emotions whenever we have to make a financial decision. And those emotions, fear, greed, anxiety, you name it, they directly drive our behavior. It's a chain reaction, and the crazy part is, most of us don't even know it's happening. So where do these beliefs even come from? Well, a lot of the time, they come from little phrases just like these. Did you hear any of these growing up? Money doesn't grow on trees. That plants a belief in scarcity, that there's never enough. Money can't buy happiness can create these weird feelings of guilt or unworthiness around actually having wealth. These aren't just old sayings. They are literally the source code for our financial operating system. So because we're running on this old emotional software, we are incredibly vulnerable to all the temptations of the modern financial world. And these are what I like to call the modern-day sirens, calling out to us, trying to lure our financial ship right onto the rocks. And here are some of their most powerful songs. You've got loss aversion. That's the one that makes us panic sell the second the market dips. Then there's present bias. That's our brain choosing a new phone today over funding our retirement tomorrow. Hurting has us all piling into a trendy stock right as the bubble's about to pop. And of course, overconfidence. That little voice convincing us we can outsmart the entire market. These aren't just bad habits. They are the symptoms of a flawed money script. Which brings us to the really crucial question. If the biggest threat to our financial future is our own emotional, impulsive brain, how do we possibly win? You can't just rely on willpower. That's like bringing a knife to a gunfight. You need a completely different strategy. And the solution isn't to try and fight your emotions head on. The solution is to make a pact with your rational self now to protect your future self from your own worst impulses. This whole idea actually comes from this awesome ancient story. In the Greek myth, the hero Ulysses knew he couldn't resist the siren's deadly song just by using willpower. So he didn't even try. Instead, he made a plan. He had his crew plug their ears with wax and then tie him as tightly as possible to the ship's mast. That way he could hear the temptation, but he was physically unable to act on it and steer the ship to its doom. And that is where we get the term Ulysses Pact. And here's the crucial thing to get. It's a pre-commitment. It's a choice you make when you are calm and rational that's designed to lock you into a certain course of action later when you know you'll be emotional and tempted. It's a promise you make now to stop yourself from doing something stupid later. And this just lays out the difference perfectly, right? Relying on willpower is exhausting. It requires you to make the right choice over and over and over again. And it is the first thing to go when you're stressed or tired. But a system, a Ulysses Pact, is totally different. You make one good decision up front, you automate it, and you take future emotion completely out of the equation. Okay, so this all sounds great in theory, but how do we actually do it? How do we build these systems that automate our own discipline? Well, here are 3 simple but incredibly powerful ways to build your own pact. First, automate your savings. That means setting up an automatic transfer from your checking to your investment account for the day you get paid. The decision is made once and it's done. Second, create a spending rule. A really good one is the 1% rule. For any non-essential purchase that costs more than 1% of your annual income, force yourself to wait at least 72 hours before buying it. This kills that emotional impulse and gives your rational brain a chance to chime in. And third, design a decision-free environment. Keep your long-term savings in a completely separate account from your daily spending money. If you can't easily access it, you're way less tempted to spend it. And this is the mental shift that happens when you start using these systems. You stop looking at restraint as deprivation. Instead, you see it as an active choice. By not buying that thing you don't really need, you are directly and immediately buying yourself a better future. It turns a negative act into a really powerful, positive one. So I want to leave you with this. The version of you that's going to be tempted to sell in a market panic or splurge on some impulse buy or put off saving for just one more month, that person is weak. They will probably give in to temptation. But the person you are right now listening to this, calm and rational, that person is strong. So the question is, what promise, what system, what pact will you make today to protect that weaker future version of yourself? Your entire financial success depends on it.